Investors boost odds of a Trump presidency. I'm Lisa Bernhard with Reuters, and joining me today is Eric Diton of the Wealth Alliance. Eric, today is the first day of trading since the assassination attempt on former President Donald Trump, the Republican nominee, obviously, for president this November. All of Wall Street's main indexes are up at the moment. What are we seeing specifically in trading today?
This is a profound day, right? We're after an assassination attempt. This is historic. And if anyone can turn an assassination attempt into a home run, it's Donald Trump with his fist held high and the American flag. And it's the ultimate picture. And the markets are telling you the story. The markets are excited. The Trump stocks are rallying. Trump stocks are crypto stocks. They're prison stocks. They're guns. Clean energy selling off, the anti-Trump stocks. So it's very clear that overall, as you said, all the indices are up. The markets like the pro-Trump world, and I summarize the pro-Trump world into something that I call RITT, R-I-T-T. I made it up. You can use it, but basically we're talking about regulation, immigration, tariffs, taxes. And that's what Trump is about. He wants looser regulation across the board. He wants to crack down on immigration. He wants to put a 10% tariff on everything coming into the country, and as always, reduce taxes.
So on a day like today, as an advisor that you are, what are you recommending to your clients?
Well, it's funny, Lisa. What we've really been recommending has been staying invested the last couple of weeks, because we've had clients calling up that just say, you know what, I don't like the uncertainty about the election. I'm nervous. This is the 4-year cycle of conversations. This happens every election. People get nervous and they say, let's just move to the sidelines. And after the election, we'll go back in. And I remind them, you can't do that. That is a timing the market philosophy. And in most cases, the election year is a strong year in the markets, despite the volatility. And even just looking at the last couple of weeks, if you move to the sidelines, you missed some pretty strong returns. So the important thing is stay invested, keep your exposure to technology. You've got to be there. We think the tech sector probably has 15% earnings growth the next 2 years. That's higher than any other sector that we look at. So you've got to be there. But again, don't be there in the S&P type of way. Don't have 20% of your money in 3 stocks. Don't get over concentrated. And thankfully, and Lisa, I know we've talked about this, that I want to see a broadening of the market. And in the last few days, we have seen a profound change in market psychology. We saw a big sell-off in tech and a corresponding big rally in everything that lagged. Talking about small cap stocks, real estate, dividend. We need to see that. If you want to see a healthy stock market, it's got to broaden. And it all comes down to that benign CPI. We saw the CPI drop month over month, first time since 2020. We saw comments from Powell that for the first time, he got concerned. He said a cooling in the labor market may be undesirable. That's big. And so everything that is debt-laden, interest rate dependent, that stuff started rallying. That's not big tech. Big tech's got very little debt and lots of cash on the balance sheet. They don't need low rates, but a lot of other companies do. So this, I just think, is a real healthy broadening of the market. I like it.
So let me pick up on that, because lots of investors are saying, and economists are saying, that inflation could stay higher and that rates could stay higher under a Trump presidency. And that would keep borrowing costs higher for a lot of companies, mainly those small and mid caps, which, to your point, have finally been rallying. So are there, on the flip side, market concerns to a Trump presidency? Does it change that dynamic? What do you think?
I think that's the biggest. I think you hit the nail on the head. It's the biggest concern of the Trump presidency is a reigniting of inflation. Listen, 2/3 of the PhDs in this country that service healthcare and engineering are immigrants. And if you start tightening down on that immigrant population, we can have a labor shortage. That's inflationary. Tariffs, that's direct. You're raising the cost of goods, imported goods. That's inflationary. And you're actually seeing one of the few areas of a sell-off today is the bond market. Bonds are selling off, not dramatically, but they are selling off. They are weak, and rates are ticking up. And that has been kind of happening recently with the strengthening of the Trump presidency. So that is my biggest concern. My other big concern is, can we finance another deficit-laden tax cut? Could we do it again? The first Trump presidency added almost $8 trillion to the debt of the United States. Could we do that again? I don't think so. So I would hope that if we're going to stay with those tax cuts, we've got to do something on the other side. Trump hinted at cutting entitlements. The only person that can get away with cutting entitlements is a second-term president. He doesn't care anymore. And someone's got to tackle entitlements. It's just the biggest part of our spending, and it needs to be dealt with. And Trump is going to be in a position to do so. And quite frankly, I hope he does. It's going to have to become more need-based.